Have you ever wondered whether gold or silver is the better investment right now? If you are asking yourself this question, you are not alone. Around the world, millions of investors are searching for ways to protect their wealth, grow their savings, and choose the right assets in an uncertain economy. And today, we're going to break down the differences between gold and silver in a way that not only informs you, but also keeps you engaged until the very end. Because by the time this video finishes, you will have a much clearer understanding of where your money might work best for you. Now, let's dive in. The timeless appeal of precious metals. For thousands of years, both gold and silver have been used as money, as stores of value, and as a hedge against economic turmoil. Empires rose and fell, currencies were created and destroyed, but gold and silver always held their worth. They are not just shiny metals, they are symbols of stability, wealth, and security. But while they are both precious metals, their roles in the modern financial system are very different. Gold is often viewed as the ultimate safe haven asset, slow, steady, and reliable. Silver, on the other hand, is often described as gold's little brother, but in reality, it's a very unique metal with explosive potential. So which one should you invest in? Gold or silver? Gold, the steady performer. Let's start with gold. Gold has always been the king of precious metals when it comes to investing. Why? Because it behaves in a very predictable and stable way. The price of gold tends to rise slowly but consistently over time. You don't usually see sudden 50% crashes or parabolic explosions in gold. It's a metal that moves like a glacier, slow, steady, but unstoppable. That's why gold is ideal for short-term to medium-term investors who want stability. If you want to park your money somewhere safe for the next 6 months, a year, or even a few years, gold is often the smarter choice. Another advantage is liquidity. Gold is recognized everywhere in the world. If you own a significant amount of physical gold, it is relatively easy to sell it in almost any country. This makes it a great option for investors who want flexibility and security. And here's another point. When we talk about large-scale investments, gold is much easier to handle than silver. If someone wants to invest, let's say $1 million, it is far simpler to do that with gold than silver. Why? Because gold is far more valuable per ounce. $1 million worth of silver would require a huge amount of storage space, while the same amount in gold could fit into a small box. So in short, gold rises steadily over time. Gold is a great short-term hedge. Gold is easier for large-scale investors. Gold is universally trusted and liquid. Sounds like a perfect investment, right? Let's talk about silver. Silver, the volatile challenger. Silver is a very different kind of investment. Unlike gold, silver tends to be much more volatile. Its price swings are bigger, its moves are sharper, and it can feel more unpredictable. For many short-term traders, that volatility is risky. It can easily wipe out gains if you are trying to play the market on a weekly or monthly basis. However, volatility isn't always bad. In fact, it is often the source of the greatest opportunities. While gold may move like a glacier, silver moves like a rocket. It can stay quiet for a long time, and then suddenly it explodes upward in price. Historically, silver has shown that when it does move, it can far outperform gold. That's why silver is often considered a long-term investment with massive upside potential. But why is silver more explosive than gold? The answer lies in its dual role. Gold is primarily a monetary asset. Silver, however, is not only a monetary metal, but also a heavily used industrial metal. Silver is used in electronics, solar panels, medical devices, batteries, and countless other applications. As the world shifts toward renewable energy and advanced technology, demand for silver is increasing. At the same time, global silver production has been declining. Mines are producing less and less silver every year, while demand continues to rise. That imbalance between supply and demand is one of the key reasons why silver has such huge long-term potential. And here's something very important. In my previous videos, I mentioned that even central banks have started to invest in silver. For decades, central banks mostly held gold as their reserve asset. But now, we are seeing a trend where even they recognize the importance of silver for the future. If you want to learn more about central banks and silver, I encourage you to check out my earlier videos on this topic. The gold to silver ratio. Now, let's get into something very interesting. The gold to silver ratio. This ratio measures how many ounces of silver it takes to buy 1 ounce of gold. Historically, this ratio has been around 1.8 in terms of the actual physical abundance of these metals in the Earth's crust. In other words, for every ounce of gold in the ground, there are about 8 ounces of silver. But in today's financial markets, the ratio is nowhere near 8. In fact, just 5 months ago, the gold to silver ratio was around 104. That means it took 104 ounces of silver to equal the value of 1 ounce of gold today. That ratio has dropped to 88. This is a very significant shift, and I personally believe it will continue to drop in the coming years. Why is the ratio so high in the first place? A big reason is the existence of what we call paper silver. This refers to silver ETFs, futures contracts, and other financial instruments that trade silver on paper without requiring physical delivery. These paper markets allow for a massive amount of silver to be traded artificially, which manipulates the price and keeps it lower than it would be in a purely physical market. But here's the key point. Manipulation is never a permanent solution. Over the long run, reality always wins. And when that happens, silver could surge dramatically as the ratio comes closer to its true historical level. Manipulation in the silver market. Let's talk a little more about that manipulation. The silver market is notoriously small compared to gold. This makes it much easier for big financial institutions to suppress prices using futures contracts and ETFs. They can flood the market with paper silver and keep the price down. But while they can do this in the short term, it is not sustainable in the long term. As physical demand continues to rise and mine production continues to fall, eventually, the paper-silver system will collapse under its own weight. When that day comes, silver prices could explode in ways that most investors cannot even imagine right now. That's why, despite all the manipulation, I am extremely bullish on silver for the long term. Both will rise, but the choice is yours. Now, let's take a step back. I want to make something clear. I believe that both gold and silver will rise in the coming years. There is almost no doubt in my mind that both metals will see higher prices in the future. The question isn't whether they will go up, it's which one is better for you, depending on your own goals and expectations. If you are looking for stability, safety, short-term hedging, or if you are investing a very large amount of money, then gold is likely the better option. But if you are looking for higher growth potential, long-term investment, exposure to industrial demand, and you are comfortable with volatility, then silver may be the smarter play. It all depends on your personal investment strategy. So, to sum it all up, gold is stable, slow, and reliable. Perfect for short-term security and large-scale investments. Silver is volatile, risky in the short term, but with massive long-term potential, especially as central banks start investing, production declines, and industrial demand skyrockets. The gold-to-silver ratio is dropping, and I believe it will continue to drop, signaling silver's strength in the years ahead. Market manipulation can hold prices down in the short term, but not forever. Eventually, silver will break free. At the end of the day, you can't really go wrong with either gold or silver. Both are excellent hedges against inflation, both are trusted stores of value, and both will almost certainly rise over the long term. The real question is, what are your goals as an investor? If you want short-term safety, choose gold. If you want long-term explosive growth, choose silver. Or better yet, why not hold both? Because in a world of uncertainty, precious metals are more important than ever. If this helped you see things differently, drop a comment and I will answer your questions. Subscribe for more honest finance content, and remember, smart money doesn't sit. It moves.